18,600 mark.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. We are coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleague Surabhi here in the studios. And Nigel, as always, joins us from the newsroom floor. Guys, hi. Good afternoon. It's a deep shade of red today. And I think it's looking pretty bad. It's looking pretty poor all over, isn't it? So in the last 14 minutes, before we get into the reasons, etc., and kind of try and explain what's happening, in the last 14 minutes or so, starting 216, there is a bit of a recovery. Let's have the intraday up, and I think it'll tell you what I'm talking about. So from the lows of the day, which is at about 17,529, we've come up about 45 points. That's a small move that is there. Let's see if we are able to build on that in any significant way, or it gets sold into. But it's been from the beginning, from the word go this morning, it's been down and down. I mean, you can look at most of Asia, markets like Korea, etc. They've also lost more than 1%. This is, of course, after the sharp cuts which we saw overnight in the US markets. Now, let me quickly revisit what the fundamentals, some of the fundamental reasons. I mean, this may be nothing new, but I think this is a large reaction and some of the biggest sort of intraday range we've seen since the day of the budget. That's the 1st of February. So it makes sense to revisit what the market is getting worried about. Factors, in a way, some are new, some are old. What is new is that there seems to be a bit of a regime change, in the sense that, after the budget, the day of the budget, 1st of February, we got a string of data out of the US, which has once again made the market believe, is making the market believe that the economy is not slowing down as the Fed wants it to. So which are these data points? You've got the jobs data first, you've got the CPI number, you've got the producer price index number, and last night we got the services PI number as well. All have beaten expectations. Actually, the services PMI is out of the contractionary zone. It's in the expansionary zone once again, which basically means that all of this data, this is good stuff, this is good data, but it's bad news because fears once again that Fed may have to do more with rate increases. The market implied terminal rate, the peak rate for the Fed funds rate, has moved up 40 basis points this month towards 5.4, and it's happened slowly. It's kind of creeped up on us, but it's a total move of 40 basis points this month in February, and I think that is quite something. We've also heard from mainstream economists, I think even people like James Bullard on the FOMC, saying that by the time we end this hiking cycle, rates in the US could get up to about 6% or so. We're not even at 5%. So I think this is what is new, or incremental, or different as compared to how things were being looked upon in January or December, or before that. US earnings are the other thing. Even as all of this is happening, US earnings have slowed down already. I mean, 80% of the S&P 500 companies were reported, and earnings excluding energy is down some 5% on a year-on-year basis. Here in India, I mean, just to come to factors, because this is not local in that sense, but the local factor, and I put that piece out in terms of the third quarter earnings and what it has done to full year FY24 estimates. Earnings have seen sharp downgrades as well. The number of companies which have seen downgrades is far higher than those which have seen upgrades, and meaningful ones at that. So no support from earnings here locally. I mean, I at least thought, Surabhi, that we kind of left the budget day levels behind, right?
Yeah,
But I think with the kind of cuts we've seen, will those come into play once again? So the budget day low is 17,353. We'll see, but that's the big sort of number on the downside to watch. And in the Bank Nifty, it's not the day of the budget, but the 30th of January low, which is 39,419, which kind of comes into play as the big support. I mean, you can talk about pivots here and there and smaller support levels, but these are the big numbers which come into sharp focus, which should not be breached. There's still full 1 hour to go for close. Maybe things do improve a little bit, but that's the state of play as things stand right now. Surabhi.
Prashant, they say markets are a great teacher in themselves, right? And I remember around the budget, a lot of us, including me, we were all thinking that the positioning is very, very lackluster before in the run-up to the budget. And then we've been underperforming. So once the event is out of the way, then the market will take off. Well, that hasn't played out for a lot of people who had that expectation, right?
But as I said, Surbhi, the last time, there's the A factor, which was completely a bolt out of the blue. I'm talking about the Adani factor.
Absolutely.
Right? That is what came in.
That makes me feel better. Thanks for reminding me, Prashant. Absolutely. But, the way look at the dollar index spiking right now, the way these moves are playing out, this is entirely global in nature. While, of course, what we saw in the first half of February was because of this A factor to an extent, as Prashant mentioned. What's happening now is entirely global in nature. The dollar index is spiking well above 104, in fact, 104.2 now. The 10-year yield, we've been talking about that. It sounds like a broken record, but it is that one factor that people are watching out for. It's pushing 3.94 last I saw it. And for the problem for the market specifically today is that there's a buyer's strike. No one wants to hold the can, including IT stocks. So pull up the contribution plate. What you'll see is that there is no counterweight in this market. Till yesterday or day before, IT was our biggest counterweight. The market has been underperforming right from the start of 2023. But IT stocks were at least finding some takers. Today, IT is out, banks are out. Big boys like Reliance, because commodities are a huge drag. Metals, energy, commodities, that's down. Rate sensitives are down. So what are you left with? Well, the gains there. Now, look at ITC. Now, let's pull up the graphs for an ITC or a Bajaj Auto. The gain is not even, 1.5%, 2%. That's the extent of the drawdown that we are witnessing today. There you go, 0.5% on ITC, this sum on Bajaj Auto. Otherwise, it's a sea of red. The Adani group itself, by the way, there's a huge decline on all of the group stocks today. Adani Ports, even ACC, pull up ACC. Last time I checked, it was down 4.5% to 5%. That's Adani Enterprises, Ports, Green, Transmission, you name it. There's a big rout that started again on these stocks. And finally, the mid-cap market, obviously, when you have so much of large-cap selling, can mid-caps really withstand much? Perhaps not, which is why your advanced decline screen has been looking extremely weak right from the morning. You've got less than 600 stocks advancing and over 2,300 stocks declining. So it just tells us the extent of this, the fall today. It's wide, it's deep, it's a big fall, and there's no other way of putting it. Nigel, we're not alone. That's the only saving grace. I keep looking at European markets. They're also down 1%. So at least we're not alone in this, right?
Well, that's right. Global equity actually is lowered in the last 24 hours or so, and we are participating on the downside. One would have wondered whether or not we could see a relative outperformance because we didn't really participate on the upside. But that's not to be. Today as well, we're under some pressure. And if you're looking at the options data, well, the 17,700 call, the 17,600 call, both of them are getting written very, very aggressively. The only glimmer of hope is that the 17,500 put as well, in the last 30-40 minutes or so, there's a sense that it's seeing some writing at those levels. So the hope is that 17,450, 17,500 could hold out for expiry. That's till tomorrow. Otherwise, it's still a sell on rise kind of market till we get past that 17,750, which was the earlier support. Now that becomes a bit of a resistance. So it's not looking too good, but don't rule out maybe a bit of a bounce from these lows, though it's unlikely to be very, very sustainable. We're falling under pressure. The breadth of the market as well is negative and no real place to hide. IT is under pressure. The Nifty Bank is all on the verge of breaking that 40,000 odd mark. You're hoping it takes some kind of support at around 40,100 odd. Otherwise, we could easily slide another 7 to around 800 points odd, Survey.
So let's watch for these levels carefully. And straight away get down to strategies. With the market behaving like this, how should you be looking at stocks or indices? What trades can you take? Well, let's take that question to Mitesh. He's joining us on this leg of the show. Mitesh, good afternoon. Thanks for joining.